I'm Corbett Wall with DV Auction, here with your feeder flash for Thursday, March the 19th, price gouging. And you guys might think about that. You might think that $11 is too much for a beer when you're at A&T Stadium there watching the Cowboys or the American Rodeo or something like that. You might think that $8 is too much for popcorn when you go to the movie theater. That's more of a location type deal. They've got a captive audience there and they know what you want and they're giving it to you, but you don't have to do it. Price gouging is more like after 9/11, if you guys remember that, when we had lines at the gas stations, or maybe when they have a big hurricane down the southeast and they have lines at the gas station. That would be marking your gas up $2 or $3 a gallon. That's price gouging, especially when it happens during a crisis. Okay, we've got that now with our packers lowering the price for these fat cattle as they continue to raise the price on these purchasers of their beef, and eventually it's the consumer that has to pay the toll on it. But it's blatant, it's in our face. I gave you guys a rundown on Wednesday's report, and I updated it with the higher box beef cutout values that happened late Wednesday. But if you look at these chicken scratches here, you can see that we use the price for choice carcasses and the price for select carcasses. Still a conservative up on the primes and a pretty liberal down on your no rolls and hard bones and things like that. But this would be a typical load of cattle in the United States, and that is the national grading average right there for the nation. And you take those and figure it up, and we come out to 154.5 or a little better for live prices of cash steers and heifers. 154.50. And we did get a little up middle of the week here because we brought about something that caused a little bit of competition. So we had a high of 113, a lot of cattle bringing 110 to 112. But that seems like an awful lot of money to be making per head on these fat cattle, steers and heifers there. And you see the drop value has backed off a little bit. That's not even counting $105 a head that they get to keep for the hide and offal and everything. But unbelievable. There's been letters written from all three of our major cattlemen's associations, lots of phone calls going around. Something's going to be done about this. Not sure exactly what it's going to be, but it has to have something with some teeth on it. We're looking at reenacting some legislation that has already been drawn up in past years by namely Chuck Grassley at one point, but we've got to set a minimum volume of negotiated cash trade. If your feeders knew that they had to buy 30% or 50% or whatever it is, negotiated cash sales every week, that would give them a little bit of leverage in selling their cattle. But whenever they know that the lion's share of their needs are already met through these contract formula deals, it leaves them out in the cold, and they worry if they don't take what the packers offer them right away, which is a smidgen of what those cattle are worth, that they're not going to get to sell them at all, and they're going to end up having to eat them themselves. But you know, we've got some of our major state associations getting into it with this, and what's really sad is whenever you've got a major cattle state and they're wanting to push some of this agenda, try to get some things done that'll help your farmers and ranchers, help your cattle feeders and things like that, and they're fearful to even sign their name to it for fear of retaliation from the packer. Because most of the time you get some people in a leadership role in these major associations at a state level, even at a local level, but when you get higher than that, a lot of the times it's just people that do that kind of thing for a living. But when you get at the state association level, you got some major players in the industry, guys that feed a lot of cattle, handle a lot of cattle, and they fear for retaliation if they sign their name to something to try to get things right in the cattle industry, and that is criminal, guys. That is criminal. And you know, we're kind of forced in this industry to look for the Packers and Stockyards Administration to do something. They really don't even have their own administration anymore. They're part of the Ag Marketing Service now. It's part of the thinning out that we've done since Trump arrived, and some of the red tape, the BS, and the waste of money there. But we've been disappointed in the P&S for decades. They never catch a criminal until after the smoke clears and it's over, and then it's pennies on the dollar if they come back and try to get them to pay up or try to get some of the loss recovered for our sale barns, for our producers, different things like that. They just never do seem to ever win a battle, and they're really so far out of the game that they got to pay admission. But now we have to look at them to try to get something done here. Well, you guys that's been in the industry, and I've heard this said many a time, the P&S, you know, you don't have to worry too much about them, but you get the DOJ or the FDA involved in this stuff, and shit starts happening pretty fast. Well, I think we're at the point where we got the DOJ involved in this. They're going to be asking some questions and looking around. The P&S is still fumbling around with the investigation that they were supposed to be doing after the fires and all the collusion and the price gouging that went on after that. They're still looking into that. Well, now we've got some deals that are actually happening. Heard from several people that there's going to be somebody looking into this. And like I mentioned earlier, if you remember the 9/11 price gouging that went on after that, the Department of Justice absolutely threw the book at some outfits that were trying to take advantage of a crisis. We're in a crisis right now, guys, and we've got some outfits definitely taking advantage. And if we don't get something done about it, we're doomed for. But look at some of the other things that are happening in the industry. We've got a bullish cattle on feed report coming out this Friday. The scary thing is they're calling it a bullish cattle on feed report, so it's got a lot to live up to. Right now, if you look at the average of the analyst guess, and the best one is published by Erner Berry there, and they've got March 1 inventories pegged at just over 100%, so just about the same as the same report a year ago. February placements all the way down to 92.4%, and the range was from 89 to 97, so even the highest guess was still less than a year ago, mostly due to the fact that the market was plunging and cattle were hard to hedge, and so there wasn't a lot of guys real anxious to put cattle on feed. So that limited, especially your direct trade, putting them on there. Not a lot of wheat cattle coming off in February. We had adequate moisture in some places during February in the wheat country, and guys were actually not a lot of cattle out there, and it actually gave guys the ability to put cattle back out there for graze out wheat, which is probably as many cattle out there right now as there's been the whole wheat grazing season. But your marketings, of course, it was a leap year. Marketing's up there at almost 105.6%. So yes, if that come to fruit, that would be a bullish cattle on feed. But if we got that, it would be considered neutral. But I tell you what, guys are scrambling for product. This coronavirus deal has got everybody scared. They continue to clean out the shelves with this panic buying, and they cannot fill in behind it fast enough. Box beef cutout values were up big again on Wednesday. You know, and the biggest thing that we're seeing at the retail level is ground beef, and they can't seem to get enough ground beef. Cows and bulls are selling high right now. You know, and the heck of it is, all the sale barns are running really light receipts. And some of your fat cattle sellers should look at that. Okay, there's no cows available in your sales because the sales you're running scared. There's not many people bringing stuff in. A lot of the sale barns have canceled their sales or can't draw that big of a crowd to have one, and they're really slacking off of that. Well, your cow killers are getting low on cows. And so they're upping the price on them. And where you do see a pretty good bunch of cows bunched up, they're bringing, big prices, way back up in the 70s again. And the heck of it is, you can get that just trailering your cows into the plant if you live close to one. And they're giving you a top price dress bid. I know locally here it's $130 dressed for cows. And if you bring some good cows in there that dress well over 50%, that's going to give you a hell of a price on cows. You cut off the source and they come to their milk. And if you guys that are selling these fat cattle on the cash market evidently can't understand that. Competition, supply and demand. If you don't understand that, that's where it's at. Remember, seems like a decade ago, but remember over the weekend and late last week, we said we were going to hold for 115 this week, and nobody did. Well, you had guys putting out a second show list this week and continuing to puke cattle in the northern plains at 175. That's not $115 live. We saw a little bit of competition come in. The Fed Cattle Exchange, your online fat cattle auction, which has really not ever taken hold because they haven't got enough receipts and we hadn't have enough packer participation in there because they hate competition. They hate having to get in there and show the true laws of supply and demand. But by gosh, they did this week, and just a smidgen of competition there up the price to the highest price that we've seen all week this week, which is 113. Let's look at the board for Wednesday. Your April live cattle futures pretty much taking back everything that they gained on Tuesday. April live cattle down $4.25 at 92.10. June down $3.82, 85.92. Your out fronts were mostly down over $4, but it was a little bit mixed in there. March feeder cattle. This is the really head scratcher right here. March feeder cattle, so that's our spot month. We're over halfway through it. It's going to have to meet up with cash here. Was down 97 cents at 112.57. Okay, your RTI is still just over 120, and it's the latest out there. Your CME cash feeder cattle index, which is what they use to settle your feeder board, is the latest available at 123.36. So more than $10 higher than what your March feeder cattle board is at. Those are going to have to come together here in just a few days, guys. And I don't think people are going to bring cattle into the sales to sell that cheap. Because whenever we see a load of cattle or some pretty good cattle come in, then they'll still bring, around $1.20 or better when the funds are still crashing your feeder cattle board. And the heck of it is, there's not enough open interest in these cattle futures right now to hold the market. Just, whoever gets in. The smallest trader can almost make a dent in it because it's so shallow right now. And a lot of your investors have gotten out of it during the fears of this coronavirus deal, and it's just too easily swayed. And then it just gets to going one way a little bit, and then these algorithms take over and just drive it all the way to the limit. And then it sits there for a little bit, and then you get a little bit more trade going the other way. Your algorithms drive it all the way to the limit the other way. That's not a way to live. That's not the way for our industry to get some kind of a price discovery. It's absolutely ridiculous. April feeder cattle down $1.25 at 109.62, but then you get at your out fronts, and they were all down from $3.32 to the limit. And we know by the time we get there, whenever we look in our rearview mirror and in the horror of this coronavirus deal, we're going to get those cattle back up there somewhere close to what they're worth. We just got to know which day to get a hold of that train before it heads that way. Your fat cattle trade happened some more on Thursday, and we talked about on Wednesday, and we talked about your Fed Cattle Exchange. Your Wednesday morning online Fed cattle auction had 4,700 offered. That's a huge number for them, because normally it's 1,000, 1,200, 1,500, but 4,700 head almost offered on your Fed Cattle Exchange, your Wednesday morning online sale. and over 1,400 of them sold. Could have been more sold, but they were trying to shoot these guys in the feet, and they decided not to take it. But still, there was enough volume on there to get some activity going. If you guys would throw in on that Fed Cattle Exchange, do something to help yourself. Don't just hand them off to them. Put them on the Fed Cattle Exchange. Give them to Consolidated Beef Producers Cooperative Marketing. Give them to Producers of Omaha. Give them to somebody that's cooperatively trying to market these cattle. You guys are so independent out there. The hardest-headed guys left out there, and you wouldn't still be trying to sell fat cattle cash if you weren't. And you guys know it too. But they sold over 1,400 head on there, and the price had a range from 111 up to 113. The weighted average on them was 112.75. A lot of 12.5 to 13. That's great. That's the best prices we've seen all week. And we're pretty much already sold more than a week's worth of sales here because these packers are so short bought and nobody's got balls enough to take advantage of it. Several PO'd lots on there from 110 to 111.50. Why couldn't they give those guys some kind of a true market there and got some more cattle? Because they're still hungry for them, guys. They're still buying cattle one day and bringing them into the plant the next. But your confirmed sales on Wednesday, Iowa, about 10,500 head from 110 to 112 and 170 up to 177. So it was a bit better than the high we had on Tuesday of 175. How do we even talk about the cattle trade this early in the week? We're used to not doing anything till Thursday or Friday, and we've already sold more than a week's movement through Wednesday here, with a lot of trade Monday, Tuesday, and Wednesday. Nebraska had confirmed sales of 10,600 head from 110 to 112. I know on the auction there we had some higher than that there in Nebraska, but 175 to 176 dressed, so that would be steady to a buck better dressed there than the previous day. Kansas, another 7,100 head. And like I said, these guys were through, and your packers are so hungry that the guys put another list together and now selling it a bit better than they did the first list. And we see what the box beef is doing. We know that cattle should be bringing somewhere up there around $150, and guys are just anxious to take the 110 to 112. It's unbelievable. Mostly 112 in Kansas. Texas, another 1,400 head, and most of that on the Fed Cattle Exchange. But your box beef cutout values, they're higher again, a bunch higher, more than you usually gain in a good week. They've been gaining it every day. We've already seen enough volume just through the first half of the week, way more than you see on a typical week or the entire week. It's unbelievable. They're taking advantage of this, guys. They're gouging your consumers. I guarantee you, when you're fighting over a package of hamburger meat, or you're fighting over a roast, or fighting over a sirloin steak, you're not going to take time to look down and see how much they're charging you for it. But choice cuts, $247.24, up another $7.31. Selects at $238.50, up $9.18, and you think, my God, these end users or these your grocery people are bidding that stuff that much higher. Your wholesale people are doing that. No, your packers put that price on there, and you either take it or leave it. The market is all in the volume. You know, they've got guts enough to put that price up there that high on all these different cuts, and your cutout values, what your accumulation of all these different prices on all these different cuts, and it's that much higher on 228 loads. Guys, that's for the daily movement on Wednesday. Now we've moved 794 loads of cuts, grinds, and trimmings just through Wednesday, and it's unbelievable. Your slaughter, keeping up the pace for the way things are, you know, with people not supposed to be getting together. They're still keeping these plants going for the most part, and the government's going to do what it can to keep your food coming in. So 359,000 through Wednesday. That's 9,000 less than last week and 1,000 less than the same week a year ago. Look at your feeder cattle market, your real-time index on DV auction at 120.52. down $2.37 because it reports all the cattle that go through, and it doesn't feel bad and think some of them are too cheap to put in a market report like you get with your federal state market reporting. CME index, the latest available at 123.36. Look at your sales. OKC West, your biggest sale in the country, 1,900 head altogether. And guys are just too scared to bring them in. Your feeder steers, another $4 to $8 lower. Feeder heifers, another $10 to $12 lower. Calves were not well tested. Dodge City, Kansas, winter livestock only had 600 head. What sold had a definite lower undertone, but not enough to really test the market. Look at some outstanding individual quotes for the way things are. These are top sales, guys. Look at these good cattle at Bluegrass Stockyards East in Mount Sterling, Kentucky. I mean, top quality kind of cattle right there. 61 head of them, weighed 854 pounds, $122.95, and that's a hell of a good price, especially out there in Kentucky. Stockman's Livestock Market, Yankton, South Dakota, 114 head of 836 pound steers, bring $127.10. And the best quote that I saw on Wednesday out of Twin Falls Livestock Commission, Twin Falls, Idaho. I'm not sure if they're getting the news out there of what's going on, but 66 head of 598 pound or 600 pound steers bring $155.25. And that's your feeder flash for Thursday.